Ondrej, how you doing?
I'm doing great. How about yourself?
Not bad. I just down 2 shots of espresso, and I'm good to go, man. I'm actually just opening up the IR section of Palantir, and then just trying to see the. I'm trying to open up the 22 from the
Hmm.
same quarter of Q4, and then we're also going to look at the Q3 of the 2023 as well, just to have like a good comparison of year over year and the quarter over quarter. So I think it's good to look at both sides, the long and the short.
Yeah, exactly. That's the big question, right, for this quarter. How the AIP is mixing the card, shuffling the deck. Any specific expectation from your side?
Honestly, I was thinking yesterday about maybe I'm not sure, but is the client growth the only focus I'd be focusing on? Because if it takes like about a year to onboard, maybe 6 months, maybe even less, if the revenue doesn't really show up right away.
Hmm.
So I would assume, what if their focus is also to just start generating revenue from the existing clients that they have right now? So, but that would mean that we're now focusing at the not only the growth of clients, but also the average price per client as well, across the board. If they don't add too many clients, it'd be good to have more. But where do you put a stop? 600, 700? Because you do have to make sure you're at capacity with your employees. And if your goal is to generate maximum, hypothetically, not saying this is happening, of maybe let's say 50 million per customer, if that is the end goal of extracting that much per, would it not be ideal to focus on each client to make sure that we're trying to starting to generate that kind of capital? So I was going to ask that question to you. What do you think about that?
Yeah, I think you're directionally correct, right? Because the way I'm thinking about Palantir also from that investment perspective, and actually that works for plenty of tech companies, right? That it's almost like a little bit like a venture capital style of the bet, where lots of the value is basically captured very far out in the future, right? So I
Mm-hmm.
actually was sharing one chart. Maybe I can find it and post it under this space. But lots of the big tech companies, Netflix, Apple, all of the big guys. Like when you look at the stock chart, it's basically it looks almost flat for a long period of time, and then it suddenly accelerates, right? And it might be the same for Palantir, where now it's really just about getting everyone on board, and once we are connected, then we start to scale it in terms of the actual revenue, right? So it's still the main metric I'm looking into is really the customers, deals, relationship that Palantir is forging. That's my point of view.
Yeah, absolutely. So I have the Q4 from 2022 open, which I think would be a good one to look at. And then we'll jump to the Q3 because I think a lot of people have already seen Q3 so many times, but we haven't gone back to 2022 yet to see what happened in that time, right? So
Mm-hmm.
that's when they achieved gap profit. So, I mean, whoever is here listening, congratulations. It's been a year since we've had gap profitability, although it was very questionable in Q4 of 2022 because, manipulation of revenue, apparently, right? So these kind of things that happen. With the understanding that the money was still theirs and it's generating interest as well. And they had to get some capital, I guess, adjusted to. But I think they knew that the whole year was going to be good, which is why they mentioned it. So we'll see what the guidance is. But I'm looking at it right now. So it's Q4 2022. We achieved gap net income profitability for the first time. So, it'll be 1 year now. So it'll be nice. Gap earnings per share revenue was 18% year over year in 2022 of Q4, to 509 million in Q4 2022. Let's see. Let's just go down to the clients growth. If you're looking at the same slide as me, I'll keep you in touch which page number I'm looking at right now, just so you have an idea as well.
Yeah, we can maybe start posting it under the space, I suppose.
Yes, we probably can.
Maybe let me pull out the snipping tool. So what page are you in at the moment?
I'm on page 15 right now.
15 of the latest quarter or the
Uh,
last year?
Q4 2022.
Yeah, okay. Mm-hmm. Yeah. I will be posting it under the space. I hope I'm doing it correctly. Yeah, so just posted the slide under the conversation.
Perfect.
So should be there, look at the profitability. And also, might be interesting to see at the analyst estimates, right? So, when we go, let's say, to Seeking Alpha.
Yeah, because I can tell you that. I have it on TradingView as well.
Because, one thing is that also, analysts are often...
Yeah, over-optimistic.
Depends on what time frame, right? Because it's relatively easy to estimate growth of something like McDonald's or Coke that are growing those few percentage points.
Yeah.
But whenever you have something non-linear, might come in bumps. It's also partly exponential scale.
Yeah. So confirm with me. The number that I have for the earning expectation is for earnings per share is 0.076. Cross-reference it with me on your data, just so we both are on the same page.
Mm-hmm.
And then the revenue estimate is 602.875.
Mm-hmm. Let me open it as well. Seeking Alpha. Yeah, that sounds accurate.
Okay, so we got that confirmed. Okay, yeah. So that's there. I think that's also based on the guidance they gave too, so which is fine.
Mm-hmm.
Over, under, whatever, as long as it's good. I'm not so sure if we should expect some sort of like astronomical beat, but if they just hit those numbers and go over by a little bit, that's fine with me too. And then the key thing is going to be guidance from here. But I'm pretty sure that if they go above by quite a bit, I think the stock will jump heavily. As long as they don't make any spelling errors on the presentation, I think we should be good.
Yeah, definitely. Or hide some chart, show the data slightly differently than last time.
Yeah, absolutely. So okay, so I'm gonna go down the slide now for the Q4 all right. So now I'm on page 19 of Q4. Sorry, so I'm looking at Q3 now. Ta-da. Okay, there you go, presentation. Okay. Page 15. Okay, so yeah, GAAP profitability page. And the next page is U.S. business generated revenue of 1.2 billion for the year ended December 31st, 2022. So that was a 32% U.S. revenue growth from 21 to 22. So it was 879 million in 21, and it jumped to 1.1 million. 1.1 billion, sorry. So, yeah.
Yes. Posting the slide. Commercial or US. So, yeah, because it's also like I always, even now, following the company for a long time, for multiple years, it's always super confusing to, commercial versus government versus US, non-US. They're always making the chart slightly different.
That is true. So 32%. So would you expect 32% again?
I would say so. We might be somewhere in that ballpark, right? What might be a little bit trickier is, of course, with all of the hopefully new clients from all of the pilots and AIP bootcamps and everything, they will basically make it. I suppose it will make the results seem a little bit worse than they are, right? Because there will be lots of these new, probably not yet paying clients or paying very little.
Yeah.
So that's also how to interpret these statistics, right? So really with Palantir.
My question is, where are they tracking right now and in the first 3 quarters, right? Are they at where are they at when it comes to the US revenue growth? And that we could probably see in the Q3. Let's see.
Yeah, if I look at the Q3 or basically like because specifically for Q3 it was basically $251 million per quarter, right? So they are basically exactly 1 billion run rate yearly.
Mm-hmm. 204. Yeah, that was 22.3. Okay. Okay. 30. Yeah, I guess we'll get the proper number once we get the Q4 and
Or
the
actually,
whole
sorry,
year.
that was the commercial part. Yeah, that's exactly what I'm talking about.
Yeah, so they have it split in Q3. They have it separated on
Yeah.
slide 21 of 37 in the Q3 2023 report. It shows commercial revenue growth and government revenue growth. It's so separate. So commercial revenue growth, and I don't know if they have that. I think that's just commercial in total. It's not separating US at all. Not that I see here.
Yeah, because then basically on slide 20 of Q3 23, there is US commercial on the left side and US government on the right side. So basically, if we add these two numbers, that should give us because okay, that's 116 million for the commercial side and
Yeah.
229 million for the government side.
Just
So
subtract the other.
yeah, all in all, that's somewhere in the ballpark of 345 million compared to last year's.
59 minus 116. Yeah, so 113 in total. So
yeah, 1.38, which would be
I'm curious if there's a way to like show the slides live.
I don't think yet, right? But they are probably testing it that the spaces are supposed to be more interactive. I think I've heard something along these lines.
Yeah, that would be a little bit easier. I think they could just screen share the whole chart. But yeah, as long as everybody else is following and they're on the same sheet. So we're looking at Q3 and Q4 2023 for Q3, and then we're looking at the Q4 2022. Just trying to see. But we'll focus on the Q4 for now, just because I think that's Q4 of 2022 for now, and then we'll go to the 2023 after. So again, 1.2 billion US generated revenue. So that was 32% from 879 in 2021 to 1.161 million. So the next slide I'm on is 17 of 34 US commercial revenue growth and US government revenue growth. So this is similar to the other report that we saw in Q3. So that was 67% in US commercial revenue, which was, I would say that was very significant from 2021 to 2022 when it comes to US commercial growth in revenue. So I would expect that to continue to rise because CARP seems to say that US is growing like crazy. So I'm expecting this to just keep adding. Maybe even 70% type of deal. So
yeah. And of course, there's mostly the commercial side, right? Because, at this point in the year, the government is a little bit slower, if I remember correctly, right? Usually these government contracts are coming in fall. So now it's going to be a little bit slower government and hopefully, rocket ship from the commercial side.
Well, the question is the NHS contract, is that going to be showing, are they going to add that to the government or the commercial? I don't know. So I guess we'll find out, right?
Yeah, good point. Yeah, right. Because that's the thing with something like Palantir, right? There are lots of these unknown or kind of sometimes these big daddy contracts that might suddenly come. That surprise.
Yeah, and
That's why it's
gonna
also.
happen. Yeah, an example is Coles, right? Where did that come from? Out of nowhere. Like it's just this recent news that just came out right now, and that's what's going to happen with a lot of the revenue too, because once the onboarding part and the critical issue that they have to solve within the company, a lot of the companies are going to wake up to realizing how valuable this thing is, and then they're going to start adding, okay, we have other problems we want to resolve. Since you solved the critical one, what else can we solve? And then I think the revenue starts to pile up quickly because they start onboarding they get the infrastructure ready, and then one problem after another, and then if they keep saving money on each one, ideally the company will continue to pay them astronomically because they continue to save more for them. So I think that's what people are not actually realizing right now, like how fast this is going to happen. It won't happen and then it'll just all of a sudden just boom, it'll just like come out of nowhere.
Yeah, and I think that's also maybe a nice segue to a little bit like an investing philosophy, because this kind of reminds me one of the important topics is that always as an investors we are dealing with a certain degree of only certain degree of transparency, let's say, and lots of the numbers, expectations. We have to somewhat make a realistic assumption, right? Educated guess what we can expect, and that's kind of that let's say a little bit more complex part of the investing, and also where the potential difference between the results of an individual investor and the market comes, right? Because
Yeah.
lots of these numbers are like I can have an opinion, you can have another. Analysts on the Wall Street have completely another one, sitting in the ivory tower looking through the income statement.
Yeah, absolutely. I always say that if it's too easy to like identify, a lot of the times there's also other 80% of the people that are going to see it. So the opportunity kind of just disappears. And a majority of the time, not always. I mean, you do have anomalies here and there where actually it is obvious and people are just not investing still. So that still happens, but it's rare. I think if everybody knows something, ideally that's the like your opportunity or the edge that you're supposed to have is not really there anymore.
Yeah.
So
Because then maybe other potential edge that sometimes happens is when companies are, let's say, hijacked in terms of narrative or kind of the overall mood of the market. So for example, what happened with Meta, right, in 2020, people draw it all the way down to 88. Now it's 400, almost 500.
yeah.
So that was a little bit like a different style, right? The information was still there, but just everyone got really kind of like a sidetrack with the information that was more based on the emotion, not based on the actual business. So there's that other type of opportunity for investor, right?
Yeah.
Either assume information that's hard to get, or be a little bit immune to these narratives, and be able to really cut through all of the BS and look at the actual business data.
Yeah, I agree. I think the key is that under the realization of with Meta was that this includes me. Not like like I think I know some of the stuff I know, but I'm also not like an expert at like getting everything right. So I totally missed Meta, and I thought, I mean, I still think that the whole gamble with the VR is still risky, but they can probably be okay to take. It's okay for them to pivot because they have like obviously capital sitting around. So they still lost nearly 4 billion with that Meta Quest, so to their VR headset, right? So that's still a bit of a startup on the side. So we'll see how it goes overall. But then the thing is, like, it doesn't matter because they generate so much ad revenue. Like, who cares? Like, they're still gonna
Exactly.
like do so well, right? So it's kind of hard to like take down a giant like that. So who else is really out there? Twitter's not even close, or X to Meta right now when it comes to ad revenue. So
Yeah.
but those are anomalies. But yeah, let's go back to now. I'm on page 19. Fiscal year 2022 revenue grew 24 billion year over year to 1.9 billion. Sorry, 24% year over year to 1.9 billion. So that was 2022 net dollar retention of 115. Now, there's this conversation about net dollar retention. I will say this is not the best metric to look at. Not because it's probably low, because you have to understand that the onboarding phase is about 3 to 6 months. So, how can you expect retention to sell a product on top of when when they just onboarded the company, right? So
Yeah.
you just solved the first critical problem. You got the infrastructure to build, and then you're looking at net dollar retention like they've been clients for 10 years, and now you're expecting like some sort of add-on. It doesn't really work like that, especially when Foundry is such a toddler. It's only like 5 years, I would guess, right? So you have to keep a focus on that. Government side, I get. I think you would be focusing on the net dollar retention on the government side, but on the commercial side, probably not yet.
Yeah, because that's also what I was saying, and maybe correct me if I'm wrong, but basically with lots of very new clients onboarding, that net dollar retention basically looks worse, right?
Because they're not actually extracting the full value out of the clients yet until they are
Yeah.
convinced, onboarded, infrastructure built. Okay, what else can we get? And then they start dishing out more tools to them. And then just like the government, right? It took small contracts, and now they're getting bigger and bigger and bigger by the year. So it's kind of like we have to wait for that to eventually catch up. Okay, next slide. I'm on 20 of 34. Again, we're on Q4 of 2022. We're looking at last year. in comparison to what's going to happen this year in Q4. So our total customer in Q4 of 2022 grew 55% year over year in Q4. So they added about 30 net new customers in Q4 of 2022. The total customer up 9% quarter over quarter. So from 21 of December to 22 of December, it was 55% growth. They were at 237 and they shot up to 367. Where do you expect this to be in 2023 of Q4?
Ooh, I have to open my numbers for that because that's actually one of the most important metrics that I'm looking into, right? Because when we look from the investment perspective, my whole like a long-term thesis for Palantir is really based on the number of clients, how much are the clients paying, because okay, we know how much are the top 20% of clients paying. We can calculate how much are clients paying on average. It's probably going to grow over the years, right, to something in between those numbers. And that way we can roughly extrapolate the revenue, right? And we can, continue with this for 2025, 26, 27, into the future with, again, some, let's say, reasonable assumption, educated guess.
Yeah. I'll tell you what I am expecting. I'm expecting some significant amount of revenue from the 237 clients from 2021.
Mm-hmm.
But not the one that started onboarding in 2022 yet.
Yeah, because I'm just opening my numbers.
Yeah,
and
no rush.
I
Take your time.
think, okay, now we are 24 and we have 300. We basically ended last year. Oh, geez. Like in my model, I have 500 clients by the end of this year, right? So not necessarily this year, now in this quarter,
Yeah.
but by the end of this year, 500 clients.
Yeah.
Which it's roughly the trend continuing. But that was that model. Let me check the date. I've updated it in November 23, right? So that was when the AIP was, it was known at that point, but the success was not yet known. So maybe I need to a little bit update the numbers, maybe bump them a little bit up.
I'm
But
going to have a... Sorry, go ahead. Sorry, I thought you were finished.
But yeah, update them mainly based on this quarter, right? How much, because this is kind of the first full quarter where AIP will show how significant it is for the client growth.
Yeah, absolutely. My expectations are a little higher. I think because of the AIP strategy of just getting exposed to Palantir software, I'm expecting, I'm going to go to 600 to 700. I'm going to push it a little further. Maybe I'm expecting too much, but I think if the way they're explaining and Carp is talking, let's go there. Because if it's from 237 to 367, I mean, they didn't have AIP back then like the way they have it now with boot camps. So why not? I think it'd be a good number to look at.
Yeah, definitely, and I hope you're right, because that would mean that they basically, by the end of this year, with your assumption, that means 1/3 of the clients would come just from this year alone, right? Mm-hmm. Which basically means, okay, if we are at a certain revenue run right now, okay, that means we are roughly, those 50% higher by the end of this year, or kind of like the future revenue run rate. We don't know when it's going to hit, but it's going to hit at some point, right? When you have, basically 50% more client compared to how much was it last year. That basically should translate to plus 50% of revenue, just not immediately.
Yeah, and I think we should expect that like this coming in 2024. We should be expecting revenue of the clients that were onboarded in 2021, and then probably midway through 2022. I'm expecting. So at least 304 clients should start generating revenue, I would say, like by 24. So they should probably have some sort of guidance on that, I'm assuming. Other thing was, no, I'm just having my train of thought just went to shit. So anyways, you go on. It'll probably come back eventually.
Yeah. And then, of course, with these kind of client numbers that we are now talking about, let's just continue and try to extrapolate the trend into 25, 26, right? So at least according to my older model, a little bit more conservative compared to you, but I have around 1,100 clients in 27, all the way to maybe like a 2,000, 2,200 clients in 2030, where, yeah, kind of, continuation of that scaling.
Yeah.
And then imagine if all of those clients are paying, not the top 20 clients, but somewhere between the average and the top 20, right? So, we are talking about basically roughly 10xing the revenue between now and those 7 years from now.
Yeah. Now, my other question is, based on the amount of forward deployed engineers that Palantir currently has as their employees or contractors, my question is, how much can one handle when it comes to businesses, right? So you have to kind of base it off, are they scaling, how many are they hiring now, and how many are onboarded? Because obviously, the more clients you get, it's going to be overwhelming unless they find a way to, like, with AIP, that you don't need as much interaction with the FTE, because now AIP solves majority of the problem, because they're bringing in the employee of the company to build a product on their own using the tools by Foundry or by Palantir, which may mean that the employee within their own organization is technically part-time FTE, while they have the assistant of Palantir's FTE as well.
Yeah. And, the beautiful thing is that Palantir is so efficient in terms of, revenue per employee and everything. Like, I think end of 2022 numbers, Palantir had little under 4,000 employees compared to, something like, say, Salesforce with 80,000.
Mm-hmm.
So, Palantir can definitely afford to, hire new people and go with that scaling.
Yeah.
Because they have that, like the margins or like revenue per employee as a metric is definitely strong, right? So even, like they can just basically maintain it, and they are still coming on top of lots of those other companies. The only companies that are having better revenue per employees are some of the, hyper efficient big guys like Apple.
Mm-hmm.
Apple has some insane, I think, if I remember correctly, Apple has like 1.6 million revenue per employee, which is even, totally out of the charts. Palantir has maybe like a 400K. I can find it.
Dividends included. Okay, I'm going to move on to slide 21 of 34 from Q4 of 2022. On here, we have commercial customer count, again, which is 260, so 147. So they have trailing 12-month revenue per top 20 customers, which was 44 million, which jumped to 49 million. Now, we do know that there was a significant increase in that trailing 12-month revenue per top 20 customers from Q3 of 2023. Let's see. Yeah. So that one from 48 million to 54 million, if I'm jumping from Q4 of 2022 to Q3 of 2023 now. Yeah, so it's still 13%. That hasn't changed.
Yeah, and I found the statistics. So Palantir, as of 2022, has roughly 500K revenue per employee.
Mm-hmm.
And, one of the top guys is like, yeah, Apple has 2 million, Alphabet has 1.4 million, Meta has 1.3 million. But, besides these, like a scaled up big tech,
Yeah.
when you compare it to like a ServiceNow or Salesforce, they are having roughly 360K, right? So Palantir is, let's say, 50%-ish, 40%-ish more efficient on per employee basis.
Yeah, seems like it. Yeah, I wonder if to like find FTEs, how many they have, but that's okay. We don't have to get into that. It might be too much. But yeah, let's go to that slide 21 if you want to look at that. And again, we're at 22 of Q4.
Yeah.
So this is the one that I really look at a lot, the average trailing 12-month revenue per top 20 customers. I think this is important. I think this kind of gives you an idea that if this would be a better net dollar retention metric, I would say, because these are customers that have been around for a while.
Yeah, which is also not nothing crazy in terms of net dollar retention, but it's growing, right? As long as it's growing and new clients are coming in, doesn't need to be some crazy numbers. It's also about the durability of revenue, right? Because also these top 20 customers are companies that have been with the Palantir for a long time. If we are talking about some of the old guard like Airbus and these.
Yeah, absolutely. Okay, 22 deals closed of Q4 of 2022. We went from 605 to 976 deals closed, so 61% increase from 21 to 2022. Do you expect more in 2023?
Yeah, and actually in deals close, I suppose that's kind of like the combination of new plus some renewals, right?
Yeah.
Yeah.
Because they did 80 deals of at least 1 million, I think, in Q3 of 2023.
Yeah. Because there's also maybe a little bit misleading metric, right? Because, okay, this probably constitutes both renewals and new deals, and we don't know, which is which.
True. This is actually yeah, you're right. We don't know that. It doesn't say new deals on there, right? So.
Yeah, exactly, right? Because that also might mean.
So let's just look at this right now. So on the next slide, which is 23, it says during Q4 2020, we closed 55 deals of at least 1 million. Now, there's obviously a similar slide every time in 23 as well. So in Q3 of 2023, it says we closed 80 deals of at least 1 million. So 55 just in Q4. Am I expecting more in Q4 of 2023? Yeah.
Yeah. Because I mean, this number should basically scale, roughly with the whole company, right? Because okay, this might be some new deals, probably some renewals, and depends if if the contracts are just for 1 year and they need to be renewed every year, or if they are for 3 years, 5 years.
Yeah.
So
absolutely. And right next it says of those 55 deals, 5 were at least 10 million. So in 23 Q3, out of the 80 deals, 12 of which were at least 10 million.
yeah, so it's getting more and bigger. Like all of the metrics are aiming in the right direction.
Yeah, that's what I'm saying too. I mean, cash flow, I don't even want to talk about. That's the next slide. Like we already know.
Yeah.
That's not the key. It's how you deploy it. It's not about the cash flow you have, but like are you deploying it correctly? But yeah, in general, it looks like it's going to be interesting. I'm going to compare both now, like the 23 and the 24. I'm going to go back to 21, 22, and then 23 once the Q4 is out. I think that would be the best way to look at it instead of jumping from quarter to quarter to quarter. You get a way better idea.
Yeah, I will probably do also some more granular breakdown. But it's also like, to be completely honest, and between the two of us plus the people listening, I'm also a little bit concerning Palantir as an investment. For the past almost a year, I was like a little bit quote unquote checked out because I spent lots of the time with Palantir. Well, I was following it from roughly the beginning, right when they went public. Then to really went deep when it was in this 12 to 6 range to be comfortable in building in the bigger position. But for the past 6 months, I've been, just like focusing on some other stuff, right? Like Palantir is doing everything it should. Yeah. And now it just needs to play it out over the next couple of years. So for me, like this quarter is just a little bit check in, peek if everything's continuing. And other than that, I'm just looking forward for either other opportunities or busy with plenty of my other stuff. That's also the beauty of long-term investing, right? Once you hammer down your thesis, like this is just for us to have a little bit of fun, look into the statistics, but it's really just a confirmation of what we've already researched over the long time, right?
Yeah, that's so true, man. Like freeing up your own time to do things, that's the ideal way to do it because you've done all the research. It's automated now. So it allows you to do the things that you want to do. But yeah, definitely. Anything like before we kind of end this here after this, anything that you're expecting that's out of the norm from the earnings in Q4?
Anything out of the norm? I mean, it really comes down to AIP and boot camps, right? Because, okay, we've heard from Carb how successful they are, but now it should be basically confirmed by, really hard numbers, right? In terms of either deals closed or new customers, maybe a little bit of revenue starts trickling in, or, have it also kind of firmly on the conference call, right? It's something different when Carp is saying, on CNBC something that might be a little bit more you know, staged, let's say.
Mm-hmm.
But when it's on the conference calls, that's a little bit more like a official, right? A little bit more gravity on the situation. So yeah, and then just after the quarter, adjust the numbers. If it's going to be a little bit better, hey, maybe I can just rise the price target for 2030.
Mm-hmm. No, absolutely. Me, I'm expecting at least like I think it'll be nice to them start showing like the AIP results, like how many clients they've converted over through the boot camp. That would be an interesting metric because that'll give you an idea of like how well the boot camps are doing in terms of um, converting clients from boot camp to actual clients. That'd be a good number to look at, and it'll probably give you an idea of like, okay, how long can they keep going, and how many more clients can they onboard if they keep doing this.
Yeah, exactly. Like, make it a little bit easier for us to look into some of these numbers, because even now with two screens, I'm kind of fumbling from side to side. It was really beautiful how they used to have back in the days that these different phases of clients, scaling and everything. It was just such a granular breakdown of all of the revenue flows. Now it's, more up to our imagination. And
Yeah,
I'm wondering, a couple of years from now, if it's going to change a little bit, right? Because also, at this point, Palantir is still a little bit a niche company, especially also since it's, basically B2B, right? So plenty of other people, that are not following the stock market might not even know the company exists, right? It's not like, Apple that is, around you all the time. But over the coming years, it might be a little bit more public company in terms of like the perception, and they might be a little bit more open, which of course, would be nice.
yeah,
But there's this long term process, really, seeing the company grow from, tens of billions into, potentially hundreds of billions in the market cap.
absolutely. So there's a comment regarding. I think this comment was made prior to me talking about the boot camp conversion. So it's Virtue Vivian Man Artist. That's the name. I think we do need to see the boot camps make a significant difference in terms of bringing in customers. Yeah, you're absolutely right. I mean, that's the idea that I'm thinking too. I think if they give those numbers out and they explain what the conversion rate is, that would be nice. And
Mm.
it would be nice to see that because if they're talking about it, I'm pretty sure they're going to put it on their slide somewhere. Um, so we'll see. We'll see how it goes.
Yeah, that could be actually nice. Maybe they can sparkle up the presentation a little bit, because because they always have this like an initial part of the presentation, the part before the numbers that's talking about the clients, and as we had the foundry con and all of these stuff. So maybe now they can give us, maybe 4 or 5 slides with some of the statistics from the boot camps. That would be nice.
Yeah,
Like,
that would
hey,
be really nice.
maybe some photos from it. Because like, we are of course following Palantir quite closely, and we are on X like all the time, maybe more than it's healthy, and we see these kind of like a snippets that someone on LinkedIn said something, and someone on Twitter said something, and so like we are really piecing this overall picture from all of these small snippets, just to
Uh,
confirm our long-term thesis.
Absolutely. Now I'm gonna before I'll ask probably any of the audience if they have any questions. Maybe we'll take like one because I think if we keep asking, then it's just gonna get like take too long. But if anyone wants to ask questions, please raise your hand and we'll just let you in to speak. Let us know. If not, then I guess this will be the end of the podcast. Let's see. Should we give him 30 seconds? All right. I don't think anybody has any questions. Okay, Andre.
Yep.
I'm gonna find a way to. I've never actually extracted the audio out of Spaces, but maybe I have to find a way to do that. One of my friends did, so I'll ask them. But yeah, and then I'll forward that podcast over to you. So if you feel like posting it on your channel, more than open to. And then
Yeah,
we'll go from
that
there.
would be amazing. Let's try it, and then we can see. Once the quarter results are in, then we can maybe do another, or definitely at least post something on X. It's
Yeah.
definitely going to be a lot of buzz. I mean, it's just 2 days away, and this time it's after hours, so might be interesting. It's after
Yeah.
hours, right? Do I
Yeah,
remember
it is.
correctly?
It is after
Oh,
hours. Yeah.
right. So it's the prime time, baby.
I know it's after hours too. I need to sleep, man. I don't want to wake up to a red candle.
Yeah, yeah,
Gap down, red candle. Oh my god! Let me have my
yeah,
coffee. Like,
yeah. Exactly.
but yeah,
Okay.
okay. We'll chat again. I think we should follow up after the earnings, and then we'll actually get a better picture of everything. So
Yeah, sounds like plan.
okay, all right, Andre.
Okay,
You take care. Have a good day, and we'll chat
you
again.
too. Thanks everyone listening. Take care, guys. Bye.